This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher today. Over the last week or so, it does look like futures have overperformed the news. Also, we did have the minutes from the December Fed policy meeting yesterday, that indicating that the Fed is likely to embark on a course of tapering their quantitative easing program. It was not that long ago, maybe a month or two back, that traders were concerned that once the Fed started its taper, that would be the end of the bull market for stock index futures, which of course was not the case. We have seen subsequently some new highs for the move. So our feeling is that while the Fed is likely to embark on this scale back of QE, there is still plenty of accommodation in the banking system that will continue to advance stock index futures. Also, I think within the next couple of weeks, we can see some new historical highs for the S&P and the Dow based on this line of thinking. Over in the currencies, the dollar index trading higher. It was just yesterday that we saw the dollar at a 7-week high. We feel that interest rate differentials remain at least short-term friendly for the US dollar, so I would look for continued strength in the greenback. We also feel that the Australian dollar could come under a little pressure. The Canadian dollar down for a third day now after earlier this week the Bank of Canada governor indicating that there is no reason to raise interest rates in Canada. And in the interest rate markets, futures a little bit better, but we feel that as the Fed scales back their QE, this should be a dominant influence that will cause treasuries to drift lower. So over the near term, I would look for weaker prices in treasuries. Also, this is a trend that I think will probably last for a month, maybe two. We'll see what develops after that. But near term, lower prices are likely for treasuries. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.